All right, guys, it's time we have a discussion about the small cap stocks, the Russell 2000 stocks. And again, for me personally, I'm talking about the small cap AI stocks and semiconductor stocks because that's where the most growth is expected over the long haul. Okay. Now, when interest rates were going up, obviously these small cap stocks have higher valuations because they're not profitable yet in most cases. Okay. So when interest rates are going up, that makes stocks less attractive. Okay. Because valuations are more under focus. So that's why those stocks really sold off. Okay. And now with an interest rate cut at some point on the horizon, in theory, right, these stocks should rebound that have been hammered because that's going to help their valuations look more attractive, okay, when interest rates get cut. Because again, more loan growth, right, personal loans, auto loans, mortgage loans, when interest rates get cut, that spurs more activity in the economy, in theory again, right? And that helps these small cap interest rate sensitive stocks because they have to tap the market sometimes to raise capital at those higher interest rates. So if interest rates are lower, that helps them, and they don't, less of a chance they'll have to dilute shareholders, okay? So that's why small caps should do well when interest rate cuts happen. But there are people out there, I want to know what camp you are in. Do you think that stocks will run up in anticipation of that interest rate cut, and then it will be a sell the news event? Or do you believe that stocks will really take off after the first interest rate cut? Now, if you look at history, most interest rate cuts have actually led to a declining stock market where stocks go down. But a lot of times that's because of a recession, right? Where it have big problems. So it's all going to come down to whether the economy holds up. Remember, job growth, right? Unemployment and consumer spending are what hold up, the two pillars that hold up the economy the most. And if those can hold up all right, and we have an interest rate cut, then I think those small caps will really continue to go higher. Okay, especially if Trump comes into office with the tax cuts. I think that's going to give a lift as well. That's just my opinion. But again, drop me a line in the comments. Let me know what you think, guys. But we're not quite there yet. We got inflation reports coming up this week. Do you think they're going to come in hotter than expected, in line with expectations, or lighter than expected? Drop me a comment with that as well. I want to see what you guys think. I think they're going to come in about in line or slightly hotter than expected again. And that will keep these high growth, small cap stocks down for a little bit longer. But it's an okay time if you're patient, like I said, to dollar cost average, because we know there is an interest rate cut on the horizon. The Fed does not want to leave rates where they're at. They're talking about a cut first. They don't think a hike is on the table anymore. Of course, you never know. If inflation data comes in way hotter than expected, that will change the narrative. But for now, they clearly want to cut rates before raising it again, okay? And so maybe it's September, maybe it's November, but like I said, if you're patient, you dollar cost average slowly into these small cap AI stocks like Upstart, like Lemonade, like Cloudflare, like Semtech, like Skywater Technology, right? We've talked a lot about these different companies out there, okay? Then you're going to be okay in the long run, okay? But in the short run, like I said, we know the Fed wants to see 3 months in a row of weaker than expected inflation. And until we get that, we're not going to know there's going to be an interest rate cut for sure happening. But if you do see inflation come in lighter than expected this week, you can day trade it on Tuesday, because remember, PPI comes out first. Okay, on Tuesday, if that comes in lighter than expected, you can day trade. And then I would get out if you're a day trader, okay, or short-term trader, because the next day, Wednesday, remember, we have the CPI report, which that usually comes in hotter. It has been lately, okay? And remember, most of that, 33% of that is shelter costs, which we know continue to remain elevated, okay? So then if CPI comes in lighter than expected, then you would buy back in and you can hold it at least through the end of the week or until there's, hotter than expected economic data that comes out. That's personally what I'm going to do. But most analysts right now expect it to come in slightly hotter. So if it does come in light, I think we'll get a nice rally. But again, I'm in the camp that thinks that inflation's going to remain elevated for a little bit, but we'll see. So just remember that, guys. But the Fed wants to see 3 months in a row of inflation coming down. Right now, we haven't even seen one, okay? Maybe one of those reports was slightly okay, where it matched, month over month expectations. But we need to see it declining again to really get people excited and get back into these small cap AI stocks. But for now, the game plan's the same as I've been saying, is the big caps, right? The mega caps, the mid caps, the companies that have strong free cash flow right now that don't have to worry about raising capital, right, at the higher interest rates or diluting shareholders. Those are the ones that have been rewarded. We've seen that with Google, right? with Microsoft, with NVIDIA. We've seen all these big cap companies, right, that just keep growing, right? They keep getting bigger and bigger. Cash flows keep coming in. They're buying back their shares. Remember, that's huge. Companies that buy back their own shares, remember, that reduces the shares outstanding. That helps with their EPS, or earnings per share. So that's why those companies have been crushing it, and they will continue to do so until we see proof that inflation's coming down. Have a great rest of your weekend, guys.